When people think about retirement, they imagine peace coffee on the porch, travel, freedom. But what if I told you that even if you've saved your whole life, a hidden risk could quietly erase everything? I'm not talking about crashes or recessions. I'm talking about silent financial killers, forces that work in the background, invisible but deadly. Most people never see them until it's too late. The first hidden risk is inflation. You've heard the word, but do you understand its power? If inflation averages just 4% a year, your money loses half its value in 18 years. That means $1 million today will only buy you what $500,000 buys to decades later. Most retirees plan their future with today's prices in mind, and that's a dangerous mistake. Fixed savings, low-yield bonds, and traditional bank accounts simply can't keep up. Then comes lifestyle inflation. Every raise feels like permission to spend more. A better car, a bigger house, nicer holidays. You call it progress, but it's a trap. Over time, your needs expand to match your income. When retirement comes and the paychecks stop, that lifestyle doesn't shrink easily. Many retirees realize too late that they've built an expensive routine they can no longer afford. The third risk is taxes. The money in your 401k or IRA isn't fully yours. Every dollar you withdraw is taxed, and future tax rates, no one knows. If the government raises rates to cover debt or health care, your retirement income shrinks overnight. Many people assume they'll be in a lower bracket after retirement, but with investment income and property gains, most aren't. You've worked for decades, don't let taxes eat your reward. Then comes emotion, the most underestimated risk of all. When markets fall, fear takes over. People sell in panic, then buy back when it's too late. Over time, this emotional cycle destroys wealth. Studies show the average investor earns far less than the market itself because of bad timing. Emotional investing quietly cuts your returns year after year. Retirement magnifies this. Every dip feels personal when your savings are on the line. Now let's talk about longevity. We are living longer than ever. That sounds great, but financially, it's a double-edged sword. More years mean more inflation, more healthcare costs, and more chances for market downturns. Many people plan to live until 80, but what if you live to 95? Outliving your money is a real and growing risk. Longevity turns every other risk into a multiplier. Healthcare costs rise faster than everything else. A single medical emergency can drain savings that took decades to build. Studies estimate an average retired couple will spend over $250,000 on medical expenses. Yet most people assume insurance will cover it all. It won't. If you underestimate healthcare inflation, your retirement plan can crumble no matter how much you saved. Let's combine these risks. Suppose you retire with $800,000, planning to withdraw $40,000 a year, 5%. At first it works. Then inflation pushes your expenses higher. Markets dip, taxes rise, and you start pulling out 7 to 8% just to maintain your lifestyle. Your portfolio starts shrinking faster than it grows. That's how most retirements fail, not from one disaster, but from small, silent pressures that compound over time. You can't eliminate risk, but you can prepare for it. Diversify smartly beyond stocks and bonds. Include assets that move differently: real estate, dividend stocks, or inflation-protected securities. Create multiple income streams. Consulting, rental income, or small online projects can give flexibility. Plan taxes strategically. Use a mix of Roth, pre-tax, and taxable accounts for control later. And build emotional discipline. A calm mind compounds wealth faster than any investment tip. In the end, the biggest risk to your retirement isn't inflation, taxes, or even the markets. It's believing your plan is safe. Financial collapse rarely happens overnight. It happens quietly while you're living life. So start reviewing your plan now. Adjust for inflation. Simplify your lifestyle. Prepare for a long life. Because freedom in retirement isn't about how much you earn, it's about how well you protect what you already have.